Hello everyone, today is Tuesday, October 13th, 2020. My name is Evan. Welcome back to another midweek stock market analysis video. Let's dive right into it. Lots going on today, lots going on this week. We've got markets down mostly across the board here today. You can see 3 of the 4 in the red, the Qs stubbornly staying positive. IWM, SPY, Dow, all down about 0.5%. Take a look at these 5-day change numbers though. Very strong performance out of US stocks right now, particularly that Nasdaq 100, 7.14% over the 5 days. The big standout last week was the Russell 2000. Russell 2000, kind of stalling a little bit here in early trading this week, and the Nasdaq really powering higher and taking back the spotlight. All the major indices are back above a 10, 50, and 200 simple moving average. If we look at sectors down here, we've got tech at the top of the list, followed by communication services and discretionary, up 5 to 6% over the past 5 days. And on the downside, real estate, energy, utilities, all still positive, anywhere from 0 to 2%. In terms of major markets, natural gas getting a big pop here, 10% to the upside, followed by the S&P 500, followed by silver, rounding out the top 3. And on the downside, we've got volatility down 11%, gold, which is up, IEF, which is the mid-duration bonds, up also slightly here, but underperforming the pack on a 5-day performance. So let's jump into the charts now that we've got a little bit of some high-level numbers out of the way. This is TC2000. We've got our equity market grid open. Our indicator here is a custom smart trend filter, just measures price and volume, helps us with direction and magnitude and strength, and price itself is the white dashed line. So weekly chart across the board, everything still in bullish formation, uptrends across the board. There's no changes there. If we go down to a daily chart, you can see we've basically got the same exact picture. Remember, we talked about these charts sort of transforming last week is when everything started to signal uptrends once again in middle or early last week. And you can see prices basically continued higher across all of these markets. SPY, Russell, Nasdaq, ACWX, which is international markets, all in what I would consider short to intermediate term uptrends. So let's take a look here at some of the specific price actions. Go down to a daily chart of the S&P 500. This is the roadmap we've been looking at. It has been clear sailing and quite urgency behind the move here as we broke above 3,400. You can see we've essentially had these gap up and just grind higher sessions for the past 4 days. We finally broke the trend today. On Tuesday here, we put in an inside session. We were trading mostly negative, but we did get off of the lows into the close of the day. Needless to say, though, the S&P 500 has been on a strong run to the upside. It is extended here on most traditional metrics in the short term. A lot of these markets have run and covered a lot of ground in pretty quick order. So in the short term, seeing some turbulence, seeing some retracements, and seeing some pullbacks here across indices and individual stocks are something that we could probably expect again in the short term. In the intermediate to longer term, this is constructive behavior. The fact that we are breaking out, we are taking out resistance, stocks, more and more stocks, and some sectors are hitting all-time highs again, that is a constructive backdrop. And when we look at breadth, which we spend a lot of time on the weekend videos, looking at market internals, all of those have been seeing some constructive developments over the past week or two. So that is the good news. In the short term, there could be a little bit of mixed price action, mixed trading. Intermediate term, things look good. S&P 500 kind of stuck in this range here. And again, we sort of talked about how price could move pretty quick through here, and we're seeing that, right? We're seeing price move pretty quickly here, trying to get potentially back up to retest these all-time highs. Not sure if that happens without some type of pullback in between, but that is the next relevant level on the upside here. It's about 35.80 or so. There's not a whole lot of prior supply or big levels to contend with So the S&P 500 sort of got that free rein here to kind of get back up and retest. On the downside, we're putting more distance away from it with each and every day, but 3,400, that is the key sort of intermediate term price level that I'd be paying attention to. As long as the S&P 500 is over 3,400, it's tough to be too bearish here. It's easy to get bearish for a day or two. Again, there's opportunity intraday, overnight to get some short-term sell signals in, but to say from a longer-term perspective, until we start breaking back below 3,400, then I got to respect the uptrend and the bullish behavior that we're seeing. So that gives us about a 3.5, almost 4% move back down to 3,400. And again, even if we got back down there, retested it and held, that would be constructive behavior in my eyes. So that's sort of what we're working with here in the S&P 500. Uptrend, short-term little extension, but we're kind of sitting in between this bigger range between 3,400 and let's call it 3,580. If we go to the Russell 2000, this was certainly, the bright spot here for the market over the past 2 weeks. It rallied over 15%. Wow. So had a big move here from low to high, which was the low from the 24th of September, the high from yesterday. 15% move in the Russell 2000. It pulled back today. It was a little bit weaker today, and deservingly so. It's covered a lot of ground in very short order. Here, I'd be looking at this 159 level. This is effectively the breakout we just had happen here last week. If we can stay above 159, if we pull back a couple more days, go sideways, find some support around this area here, that would be very constructive price behavior here for the Russell 2000. So let's see if that happens. For now, intermediate term, bulls certainly in control. Short term, a little extended to the upside. And we do have that gap over here, which we didn't really fill. We got into this gap here. This is the only of the major indices that haven't got back up and closed this February gap. We pushed into it yesterday, but then you can see we retreated a bit today. So I wouldn't be surprised to see this get filled, in this move, but we might need a little bit of a pullback before that happens. Last but not least, the Nasdaq 100 really coming alive this week. It was really yesterday where this thing saw a 3.09% move yesterday. It's a big move for the Nasdaq 100. A lot of those mega cap stocks that drive this ETF were, soaring yesterday ahead of and Prime Day and Apple event and earnings season, obviously coming up as well. But a lot of those stocks were on the rise yesterday. We got the breakout over 280. We're not quite back to the all-time highs yet. So again, we're kind of sitting in no man's land really in all of these markets. We're below all-time highs, but we're holding above this intermediate term breakout level. So while you're in the middle of these ranges, price can certainly oscillate and turn around and kind of confuse a lot of traders, but the longer term trends are still supportive at this point, and I think that's what's certainly most important. The Qs really though regaining that spotlight from the Russell 2000 that made a lot of headway last week. Last thing I want to talk about is the VIX here. The VIX we highlighted on Friday as let's go to the VIX spot. We don't want the 3-month, we want just the VIX. So we talked about this sort of range that the market's been kind of comfortably trading within for the past month or so. Basically lows around 25, highs around 30. VIX gets up around 30. You basically sell it, or you're putting on equity risk. And when things get down to around 25 or so, maybe you're selling stocks or you're hedging up or doing something like that. That pattern has worked for the past month or so. Eventually this pattern will not work, right? Eventually we'll get some type of breakout. But when that happens is anybody's guess. For now, though, we talked Friday about the fact that VIX back at the lower end of the range probably means you could put back some of those hedges or sell some if you're a short-term trader. Maybe you're putting on some shorts. VIX has continued to bounce and rally today, and we'll see if it can continue to move back up into this range and continue this pattern here. But again, it speaks to a little bit of the complacency froth and short-term overextension we've seen in lots of these markets, and a little bit of a rug pull here makes some sense. So if we go to some of the other markets, we go to credit and interest rates or bonds, we can see here on, let's go to a daily chart. So in terms of credit markets in the top, you got LQD, so this investment grade corporate bonds got a buy signal, produced a buy signal here today. We did get a buy signal back here on the 16th of September. That didn't last too long, so a little bit of a whipsaw in here. That trade did not work out so well, but we're getting a new signal here today. We'll see if this one sticks. That again bodes pretty well, for equities generally. You kind of want to see these things holding intact, continuing to trend higher, bodes well for solvency and all the like. J&K is in fact still in an uptrend here, transitioned up last week, continues to move higher. VIX, you can see, sold off below its trend. It is neutral right now, printed a sell signal on Monday, so I would again expect a little mean reversion here, but still it doesn't suggest of anything that is in a strong trend. And if we look in the bottom right TLT, you can see this is trying to get back up to its trend. It had a big day today, pretty big for TLT anyway, 0.72%. And this is notably trying to attack its trend, still on a bear signal though. It's got some more work to do to reverse that. If we look at commodities, go down to a daily chart here, you can see gold is trying to turn back up, printed a buy signal yesterday, gave some back today. You can see it's not totally rolling over. Traditionally, we like to say we'll always look at the preceding signal as kind of the path of least resistance. So we're going to try and give the benefit of the doubt to the gold bulls right now, given the buy signal yesterday, but they're going to have to come in and bid this up tomorrow. Otherwise, this might roll right back over. Silver basically in the same boat. It's been, basically bearish to sideways down for many weeks, trying to turn back up right now, and we'll see if that sticks. USO trying to turn back up as well. DBC, kind of the same thing there that we've been talking about. I want to look at some sectors real quick. Couple of sectors here. SMH, we talked about this last week. We've talked about this sector here in the last couple of weeks. And this is at all-time highs. So this is, again, kind of when we think about sectors and breadth expansion, things that are getting back to all-time highs are things we want to be paying attention to. Again, I would not necessarily want to be initiating new SMH longs here. It's just not my strategy or style. It's certainly covered a good amount of ground in the short term, but it is a sector that's got some strength behind it. Looking for opportunities there underneath the hood makes sense. XLY, here's another one that broke to new highs this week. So this is consumer discretionary. Again, adding to that breadth, seeing more individual sectors that are hitting new all-time highs. That is constructive behavior. I still like, from a price action perspective, utilities in the sense that they are trying to resolve this long sideways kind of sleepy range here for the past 5 months. And the fact that we're trying to break out now, again, short-term, very extended, so it's a tough chase, but this is something I'd want to be paying attention to. And if you're, depending on your time horizon, it is or it is not a chase, given the fact that it's gone nowhere for 5 months. So that's something to also keep in mind. Its close cousin there would be real estate sector, so like the XLRE outright. This here also trying to, or at least got back to the top end of its range. It did give back a decent amount. So it looks like it's trying to sell at the top end of this range. Resistance is still kind of holding up here at the top end of that range. So we'll see if this ends up resolving, but it's just another area of the market that I think is sort of interesting and sort of pent up and something to keep an eye on. So that's it. I think we went through this pretty quick today, but real takeaways here is we got earnings season that's kicking off. We've got equity markets that are full steam ahead right now. Kind of election be damned, doesn't matter. Let's just rally them up. And, perhaps there's a lot of money on the sidelines that's just nervous or doesn't want to participate over this next 3 weeks or just wants to see the dust settle. Maybe that's why we're getting, and we don't see a lot of aggressive selling in there. We just got a lot of sideline money. Market's free to sort of float higher. But let's not fall asleep on risk. Risk happens fast. We know the VIX is at the bottom end of its range. We've had a strong run. So, let's keep our eyes sort of peeled here and manage risk accordingly. So hopefully this video helps. Thanks as always for tuning in and watching and listening. Every Tuesday we do our midweek videos. We'll be back tomorrow with some trade ideas. And then Friday we do our long form market analysis video. Have a great rest of your day. Thanks so much. We'll see you back here tomorrow.